All right, I guess we can start. Hi, everyone. I'm just gonna do a quick introduction. Before we begin, let's take a moment to reflect on the land that we're on and its history. We acknowledge that the land that we are meeting on today is the traditional territory of many nations, including the Mississaugas of the Credit, the Anishinaabe, the Chippewa, the Haudenosaunee, and the Wendat peoples, and is now home to many diverse First Nations, Inuit, and Métis peoples. We are most grateful and respectful for the use of this land. And we have with us today Dr. Petar Jevtic, who is a tenured associate professor at the School of Mathematical and Statistical Sciences at the Arizona State University. Please welcome Dr. Petar Jevtic, and I'll hand it over to you whenever you're ready.
Well, thank you. Thank you for the invitation. It's a pleasure to showcase our latest research done with my PhD student, Cody De Los Santos, who is really gifted a PhD student and interested in crime and implications of crime. We together, if you haven't seen, already published a paper related to impact of natural hazards on crime. But this work is a joint work with Cody and Professor David Flynn from University of North Dakota, as well as Professor Stephen Morrison, who are our dear collaborators. And we in this work try to understand the impact of community surveillance on property insurance risk, and we try to assess loss mitigation effects of ring neighbors. And I'll tell more what is that about. So my presentation will have a standard outline. I'm going to motivate this research, tell you a bit about the data we use, then methods we deploy. I'm going to show our results and specifically underline insurance implications. And then I will conclude the presentation with discussion and conclusion. So first starting point in motivation, I would like to say that one needs to really take account of the fact that, let's say in 2017, in US, 120 million crimes happened, which costed cumulatively $2.6 trillion. And US on average dedicates between 2 to 6% percent of its GDP to managing the consequences of criminal activity. So when it comes to insurance implications, this crime activity has implications on burglary, theft, and vandalism, arson, which primarily drive homeowners insurance, which we investigate in this research. So the frequency and severity of such crimes directly impact loss ratios and claim handling costs, and finally, policy pricing strategies. Crime often exhibits spatial clustering, and a more nuanced understanding is needed, as our research is going to show. But particularly for underwriting practices which currently rely on zip codes or census tract level risk segmentation. Um, Amazon's Ring system currently is one of the most widely adopted home security technologies in US, and it hosts a neighbors platform. That platform is specifically interesting because it allows community police collaboration. And so looking into that, we identified the research gap. We realized that there is a limited evaluation of whether use of this platform actually reduces crime, and if it does so, does it have any effect which are relevant for homeowners insurance? So what is the Ring and Ring Neighbors platform? So Ring is a home security platform which enables, as I said, via its neighbors system, a collaboration between residents and law enforcement agencies. Sometimes I'm going to refer to them in presentations as LEAs. And those can be local sheriff offices, police departments, and etc. How does it work? Well, this is a digital platform. You have your app on your cell phone, and you can share videos, photo, comments of the captured information from your cameras. And the sharing can happen between residents, neighbors, neighbors platform, and law enforcement, but through verified accounts. So law enforcement agencies need to verify account with neighbors platform. However, communication can also be bidirectional. the law enforcement agencies can directly also through that platform communicate with residents. In the past, police could make requests directly to the platform for information, what is screenshot, what are the videos recorded, and so on. These days, sharing with police is largely voluntary. But this is new mechanism we see in managing crime, and this is something we call frictionless reporting. So easy sharing of security footage and information. This is an example of something that could be captured from a Ring platform, shared on a Ring neighbors platform. And this is example is taken from a Boston Magazine article. When you look at the current state of literature, so background literature, first of all, you notice that many law enforcement agencies actually do not perform any evaluation on the technologies that are implemented, such as Ring technology, in their jurisdictions. However, there are studies that are more broadly focused on predictive policing and body-worn cameras. Also, lots of literature investigated the effect of closed-circuit television, CCTV, on crime prevention. And that research demonstrated the effectiveness of the CCTV in reducing crime. Therefore, a gap in literature exists in our view, because despite really substantial increasing number of agencies, law enforcement agencies, which have a verified account at Neighbors platform, there is a limited research evaluating subsequent crime incidents post-account activation. So specific goals and approach in this study that we did to address this gap in literature will be to explore the impact of law enforcement agencies activating a neighbor's verified account on crime rates in their jurisdictions. And then using generalized difference in difference framework, we evaluate how such adoption corresponds to measurable decline in crime incidents across various subsets of crime. The generalized DAD approach, for those of you who are not familiar, allows for nuanced analysis of treatment effects by accounting for various variations across time periods and jurisdictions. Here, the treatment will be activating a neighbor's verified account, and treated units will be LEAs, law enforcement agencies. So that's our strategy for this um, um, research. When it comes to data, we use two data sources. The premier national incidence-based reporting system, NIBRIS. This data set details incident level data from 1991 to 2022. And it allows for multiple offenses and offenders per incident. But our focus period is going to be from 2016 to 2022 because various technical issues involved with the consistent reporting. This data set, compared to previous reporting data set UCR, contains 41 criminal categories. We will not need all of them. And also, we will look at Ring LEA activation data. We will finally, after lots of data cleaning and processing and imposing certain quality constraints on a data set, have 457 treated agencies, law enforcement agencies, which have consistent NIBRIS reporting. And we will have 2,118 potential control law enforcement agency which have not activated a neighbor's account. And we will match treated agency with one control agency. We will match it by proximity. But the proximity, unfortunately, is not the only criteria we can use for matching, because if you match for a direct neighbor of a treated agency, that might, in certain arrangements, pose a problem for other treated agencies. So we will deploy a Hungarian algorithm for geographic proximity pairing. And this algorithm ensures pairing treated versus control agency that minimizes aggregate distance between paired units. So that's our approach. So just to convince you that the NIBRUS dataset is very useful, though it is a golden standard for incidence reporting, I can show you that from certain source that, and without going to details of this graph, that over time the number of agencies that report to NIBRUS has steadily grown, but also increased of reporting of law enforcement agencies to NIBRUS brought to increased percentage coverage of US population and incidents that happen. So we have substantial coverage of US population in recent years. When you look at ring activation data and you look at the latest recorded map, where you can see something like this. These are agencies with verified neighbors account. So which crimes are we gonna look at from neighbors? We will look at offense segment of neighbors data set. And when you look at crime types and subsets, you will see that there are multiple crimes against person, like aggravated assault, intimidation, various kind of crimes involving rape. And moving from that category, we have crimes against property, which are also very interesting for us, bribery, embezzlement, wire fraud, and so on. But the most focus is going to be arson, burglary, breaking and entering, destruction, damaging, vandalizing of property, and so on. Those are offenses which are risks covered in homeowners insurance policies. So with that, let me briefly say something about our research method. So what we're going to deploy is, as I said before, it's a generalized difference in difference method. So what's our challenge here? Why generalized difference in difference? We have staggered adoption treatment adoption. So not all agencies that now have currently active and ring neighbors account have done that at the same time. So they did it across the span of years. So we need to have opportunity to have a staggered treatment adoption. And so the standard technique for that is two-way fixed effect model. The good reference is Wing and co-authors in 2018. And that model allows for a response variable Y to account for crime incidents for agency G at time T. And we will have agency fixed effects, then time fixed effects, and then we will have a treatment indicator whether that agency at time T, agency G, is already experienced ring activation. The key parameter is delta, which is a treatment effect. And so this technique is very standard. However, there are recently some critiques of it, and to verify the robustness of our findings, we, in addition to this technique, implement something called stacked difference in difference approach as a robustness check. And the best practices for this approach is Wing 2024. This is a little bit technical approach, so I'm not going to go into details in this presentation, but we have a print available at the end of presentation. I'll give its coordinates and you can learn more if of interest. Okay, so about the difference and difference approach we're going to use. So for those of you who are not familiar with difference and difference approach, this double differences in differencing in DID isolates treatment effects by removing two types of confounding. So first difference, unit effects remove all time invariant differences between groups. Those can be some socio-geographic characteristics, cultural characteristics, baseline demographical characteristics, and so on, even if treated units differ systematically in the levels. A second difference, time fixed effects. They remove common trends and shocks. Um, so with these two differencing, we address time invariant covariance, and they drop out and they don't affect identification of the treatment effect. However, there are time varying covariates, dynamically changing unemployment rates, income fluctuation, poverty rates, business dynamics, housing market conditions, population changes, age distribution changes, and so on and so forth. With them, always the question is, are they relevant on the time scale we are looking? Um, but obviously controlling for them would be ideal. But in fact, it's optional in our case. In principle, it can improve precision and support conditional parallel trends if groups have different trends. But in our case, on the scale, a time scale we are looking at, and given that our controls are specifically picked, um, uh, not least by proximity, we feel that this is not something that is very important for us. Um, so estimating our equations, we omit time varying covariates, as you see in the expression I showed a slide ago, 2 slides ago. And in practical terms, if we would want to attempt to include time varying covariates to improve maybe the parallel assumption, um, the biggest hurdle is that jurisdictions rarely of law enforcement agencies rarely map cleanly into city or counties. And so many cities actually contain multiple overlapping law enforcement agencies with heterogeneous service areas. So constructing this agency level covariate set, time varying covariate set, would require very difficult spatial apportionment. And we would need to have a set of assumptions about within city responsibilities, and that would likely introduce a bias. We wouldn't be able to uh, consistently do that without introducing bias across all the treated units. So in fact, our approach is consistent with prominent applications whose baseline specifications just include fixed effects and then dynamic treatment indicators rather than involve the rich set of time-varying covariates. While these applications like us focus on validation of the parallel trends assumption between control and treatment groups. And that's important, really. That justifies just using our DID to an extent. I admit, uh, uh, and meeting time invariant covariates. So to check our parallel trends assumption, um, we create pairs of control and treatment units. We look at 76,000 observations across 940 14 law enforcement agencies. So treated unit and its control. And so what we look at is whether pre-treatment trends in crime incidents for both the treatment and control groups are sufficiently aligned, have parallel trend to allow for credible comparison of post-treatment outcomes. So, so we have a visual inspection of all of that, and we have a formal test of regression slopes. Formal test of regression slope, I would refer you to results in a preprint. But our final determination is that our pairing was successful. So we have a critical assumption met that treated and control groups follow parallel trends absent treatment. So an example of that, let's say we can look at the pairing 129, for example. You see pre-treatment, and our treatment, again, to reiterate, is verifying neighbor's account, activating verified neighbor's account. And so this is you can see treated and control prior to that event, prior to that treatment, and post that treatment. So we verify parallel slopes here as well. This is example of some other pair. So we have a visual expression, as I said, we have a statistical inspection. Okay, so now we have that. We are reasonably comfortable with our methodology, and we want to then we discuss our findings, and our findings actually depend on what set of crimes we investigate. So when we look at all the crimes against person and we apply generalized difference in difference, we find no statistically significant treatment effect. So there are many reasons why that can happen. So one of the reasons is that violent crimes are potentially less sensitive to ring-specific technology. And remember that ring-specific cameras are oriented in special way. They're found on front doors, backgrounds, and more residential and outside areas. And it's possible that violent crimes, the logistics and the setting of a violent crime is not conducive to be captured with this technology. But also other factors might play a role. Um, Maybe we don't have a sufficient number of neighbors, agencies verified accounts. Time frame might not be sufficient. Geographic scope it might not be sufficient, and so on. So when it comes to crimes against persons, um, with our methodology, we cannot show significant change with an adoption neighbors technology. But then when we look at crimes against property, and specifically subset then afterwards with the crimes relevant to homeowners insurance, which is theft, burglary, and so on, arson, and so on. So we find that we have negative and statistically significant treatment effects of different scale. That means that introduction of ring neighbors technology shows reduction in crime counts. So, potential mechanism would be that this frictionless reporting can maybe lead to more arrests, and because the footage is being shared and easily shared, and there is a flow of evidence much more abundant than not having this technology available to police units. So specifics here, you see here that actually if you look at crime type, on average, we find reduction of per month per agency, 6 fewer crimes, 7 fewer insurance-related crimes per month per agency, 6 property-related crimes, and I said before, we have no significant effect for violent crimes. So, so as I said before, there are some critiques of this technique. So we implemented the staggered DID estimation technique to just check whether these findings are warranted. We have with TWFE technique. And so the results of staggered DID estimation align with TWFE estimation, and that the staggered DID requires conceptualization as sub-experiments and so on. But final point is that we have same effect, same trend, same directionality of effect reduction, though slightly different size of the effect. So we find we are now comfortable with our findings, and final touch would be if we look at all types of crime. So what does introduction of ring neighbors technology does to all types of crime, and we didn't find any significant treatment effect. So finally, we found a significant treatment effect in property-related crimes and also to homeowners insurance-related crimes. So that's our main message. And so to illustrate financial impact this might entail, we make a following assumption. We take a look at burglaries, for example, and And given information from Insurance Information Institute in 2024, average burglary claim is $2,500. Our treatment effect is 7.21 fewer incidents per month per agency. Um, of course, not all incidents are reported, so that's something very important to notice. Um, um, and so we have assumption of claim filling rate from 30 to 50%. This is based on victim survey data from Black 2022. And so if we look at that and we maybe look at different scales and we look at well, maybe 1,000 annual incident scale, which is a city scale, then expected number of claims would be from 300 to 500. And then given our assumption of average burglary claims, then claim costs would be from 0.75 million to 1.25 million. Also, if you look at bigger scale of that can be more substantial, but just bear in mind that these are just indemnity costs. There is no cost for claims processing and other additional costs. So still, one can see that there are meaningful impacts. Um, if we scale this by 12 months, and and then we look at how many law enforcement agencies are per county, for example, and usually between 4 and 6. That's a, meaningful interval. The true average is 5.58. And account for this 30 to 50% claims rate and loss severity now between 2,000 and 3,500 per claim. And we using the knowledge of our treatment effect size per month per agency. We can illustrate now the savings that happen from introduction of this technology. This is average selling savings across entire geography of US. So if, for example, if you have 4 law enforcement agency per county with a 30% claims rate and a low end of loss per claims, for example, you will avert 283 accidents and maybe have a bit less than $200,000 of saving. However, if you have, let's say, 6 law enforcement agencies with a 50% claims rate, you can even reach $1 million savings. So those are, as I said, just indemnity costs, excluding additional adjusting and handling expenses. So for insurers, the final costs are even higher. One other perspective that one can take is to ask yourself, what is a break-even cost per agency? So we can say, you know, if we would like to support adoption of a ring technology in certain law enforcement agencies' jurisdiction, how much we can do that so that we can break even. So we can calculate that break-even annual costs per law enforcement agency on average can vary between $42,000 to, let's say, $123,000. That's a lower bound, and there is an upper bound of almost $200,000. Now, if you now within the law enforcement agency's jurisdiction divide that by number of potential policy holders you want to subsidize to use ring technology, then you will see how much discount or subsidy you can make by dividing that number by the number of potential policyholders you want to engage with. So this is, I think, very useful quantity to think of. Of course, now I frequently mentioned so far in my presentation that this is on average. You can drill in and look at, especially across geography, how things change. So in San Francisco, if you look at, for example, San Francisco Police Department, in 2023, there were 5,600 burglaries, but then that number fell a bit in 2022. And then after adoption of ring neighbors technology, that's one anecdotal evidence. There are many more. We consistently see that pattern across treatment groups. And so, for example, we have also the cases with Phoenix and Los Angeles. One other thing it's really important to note is that variability of incidents changes post adoption of ring technology. So if you take just a small snippet of geographical variability that we now have access to after this modeling, you can see, as I said, in San Francisco, monthly counts, San Francisco Police Department monthly counts drop, and also Phoenix PD drop, Los Angeles PD drop, post adoption of ring technology. I wouldn't say adoption because our model is actually related to activation of verified accounts. So that's one particular aspect. However, the variance ratio, variance before and after treatment of incidents changes and sometimes gets bigger. So one needs to be very careful with the current modeling practices for crime rates to take an account if you're still using your zip code or census tract crime rate approach. Please be careful if the ring technology is adopted. We see that there is additional variability of crime rates, and we believe that the models should account for that. So in summary, when you look at from actuarial and underwriting perspective of our work, so there is implication from predictive modeling. Adoption of this technology, ring neighbors, or maybe similar in the future, should be potentially included as a rating variable. This technology really calls for specific geographic risk differentiation. There is indication for the need of discounts for adoption, similar discounts for alarms or wildlife mitigation, wildfire mitigation. We detect loss ratio improvements, things that lead to loss ratio improvements, so reduce claim frequency. Then basically you will have a lower volatility in your quarterly performance and maybe potentially more favorable reinsurance terms. But for product innovation, there is also implication. As I said, discounts in jurisdictions with verified accounts, then stimulating also jurisdictions, incentivize them to verify their accounts. Verifying their accounts will mean that they will have access to that information flow. So smart home security subsidies, especially in high loss regions. But what's very tantalizing, however, there is no data yet for it, maybe some kind of a telematics style pricing based on how much volume of data is being shared between the community and police departments. Of course, as any study, this study has its own limitations. Let me quickly reflect on that. As you've seen from my plot, the entire US population is not covered in neighbors. Certainly, there are some reporting biases. We did a data cleaning, which is recommended by FBI sources and standardized data cleaning to account for certain reporting biases and qualities. And we removed lots of law enforcement agencies. However, it's always good to know that neighbors is not perfect. And so effects may vary by jurisdiction characteristics, definitely. We omit time-varying covariates. Structurally, it would be very difficult to create them, but practically it doesn't seem to be very necessary because we show the parallel behavior and we also give our best to have the closest possible control such that time-varying covariates are potentially shared. However, as I said, we don't take immediately the closest control. We on an aggregate want to minimize the distance between all controls and using Hungarian algorithm between all the controls and treated units. In this work, we do not consider any surveillance and data governance considerations. This is not our focus, and there are many questions. You know, can your camera and recording of your neighbor on what happens on the street, can that be given to police? Under which circumstances? When does it constitute as an evidence? Constantly surveilling part of your neighbor's backyard and so on. There are many legal and ethical questions. We do not deal with those in this research. And there are some concerns about access to this technology to other various kind of groups and communities. So those are valid concerns, but we do not engage with them in this research. We are only interested how this technology reduces crime, and does that reduction make a meaningful effect for insurer. And so for us then, key takeaways based on this research is that yes, there is a meaningful crime reduction. So we see per law enforcement agency per month that we on average have 6 to 7 fewer property or insurance home insurer relevant crimes. Crime types matter. Not every crime type is affected by this technology. There could be meaningful savings for insurers. This is a wonderful technology in the sense that it's very scalable and it's very low cost to implement. So there is opportunity for insurers to incentivize its adoption, to incentivize access of law enforcement agency to a Ring neighbors platform. That should be incorporated as well in new pricing models and loss forecasting and product designs. Broader implications of this technology is this technology and other community level technologies can help or definitely change the landscape of risk. And we need to be ever vigilant in accounting that in our modeling. So with that, I would like to conclude and say that our main finding and the starting questions I began my presentation with is answered to through this research in our view. Law enforcement adoption of Ring neighbors verified accounts meaningfully reduces property crimes and crimes relevant to home insurance. And our contribution is to do this first, to our knowledge, large-scale evaluation of community surveillance platforms' impact on crime, and show that there are direct insurance implications. So with that, I would thank you, and I'll leave my contact and also show here the coordinates for our preprint, which is available on SSRN, and ask if there are any questions. Thank you.
Thank you, Peter, for such an amazing presentation. Does anyone have any questions? Please feel free to put it in the chat if you don't want to speak up. Well, I guess no one has any other questions for you,
All
Peter.
clear. Um,
So yeah, I mean, Peter's email is on the screen. So if anyone has any questions, please feel free to email him. And yeah, thank you, Peter, for being a guest speaker for today's colloquia. And we look forward to seeing everyone for the next colloquia.
So thank you all for having me. And if you have any questions, please feel free to reach out. And also we have that preprint available. Take a look when you get the chance. and happy to connect in some other venue.
Thank you, everyone. Have a good rest of your day.